Okay, guys, good afternoon. Welcome to Talking About Finance. It's Sunday, June 27th. My name is Dave Coker. You know the routine, 7 slides for 7 days, although this week there's 8 slides. You'll see what happens there. We're going to start out, and you just know we're going to talk about Bitcoin. And I think you guys know my story by now. I bought Bitcoin every Friday night for years, and I stopped in December 2019. It was starting to dwarf my portfolio or become a whale in my portfolio. I wasn't comfortable. And I started buying about 2 weeks ago. So I got a couple DMs, and people are sort of curious about why I was buying again and asked if I had sold. And I did mention it before. I didn't sell any, significant at least. I sold 5/100ths of one Bitcoin. I did 3 transactions just to get a relationship set up with an FCA approved exchange. And things went well. If you want a referral, I'll give you the name. I don't pitch for anybody here. So if you want, just DM me and I'll tell you who I'm doing business with. They're actually very good. I've been doing a lot of trades with them over the past few days. So I started buying again because the price of Bitcoin dropped significantly. And looking at Bitcoin in my investment holdings and some planning I'm doing, I had sold a property in the States and a couple things happened. So it seemed like a good idea to deploy more capital into that asset. So now we can talk about supply and demand. And when we take a look at the supply and demand for Bitcoin, I'm not going to tell you the website, you can find it. But if you take a look at it, it's a wonderful site, and they actually track what's going on with Bitcoin. Now, the most important point, they've got a lot of stuff there. It's an actually excellent website. The most important thing, guys, is 900 Bitcoins per day. Sure, every 10 minutes, 6.25 Bitcoins are created. Here's the point. There's roughly 18.7 million in existence. We know there's only going to be 21 million, and there's about 2.2 million left. In other words, almost 90%, well, a little bit more than 89% of the entire supply has already been mined and it's owned. It's not sitting there waiting for you to buy it. It's owned. So, guys, ask yourself a question. Do you really believe going forward that Bitcoin's going to disappear, or do you think it's going to continue with this process we've seen where acceptance and utility is growing? I'm putting my money in the latter argument. I don't think Bitcoin's going anyplace. Governments don't really like it. There's no doubt about that, but it's not going to disappear. And I want to own some Bitcoin. I want to own more Bitcoin than I've got now. That's why I'm buying. And I continue to buy every Friday night, although since it got back on the train, I've gone in many, many times because it dropped down to 28K yesterday. And of course, that's an op to buy. So I'm currently going to be buying or continue to buy. I just won't tell you when I'm stopping, or maybe I will, but make up your own mind. And again, hit me up on DMs if you got any questions about this stuff. Oh, and I got to do this. I got to give you a public service announcement, right? This is really interesting, guys. Apparently, Binance came to the attention of the FCA, and this is really fascinating to see how this shakes out. I haven't seen anything on their website. Haven't really heard too much about this, although there is an announcement whizzing around from FCA. Now, if you're using Binance, you better get your coins and funds out of there really quickly. I'm not saying they're going to take your money, anything quite like that. There's no exit scam coming. What I'm saying is that you don't want to be caught on the wrong side of some regulatory argument where they lock down that site for an indeterminable period of time and you can't get your assets off, or it's an involved process to get your money and coins off. So I would advise you guys to push it out. If you got coins there, get them out quick. And same thing with money. If you got money there, you might want to consider getting the capital out. Yeah, it's just you don't want to be in kind of mess like that. So that's my public service announcement for the day. Oh, and I got another one. Look at this. Here's another one. Now, I think I've read every book written about Warren. I'm not totally sure. There might be other ones out there. When they do come up, I buy them. I'm a voracious reader, and summer times are when I catch up on an awful lot of reading. I've got about 200 books on my list I got to push through between now and when summer's over and I go back to lecturing full time. But this is an interesting one. Some of my buddies aren't fans. And just to taunt them, I push this over. I irritate them a little bit, right? And guys, this is exactly how I operate. And I've mentioned this before to you. Think about what I'm doing or what I've done and see if it'll work for you. I only hold, or the bulk of my assets are in dividend paying stocks and rental property, and they generate cash 24/7. It's, of course, realized at discrete intervals, might be paid monthly, might be paid quarterly. But if you can structure your portfolio to generate cash flow, oh boy, a lot of problems just disappear. And in my wealth class, I've helped lots of people over the, I've been running that about 12 years now, helped lots of people understand how to generate capital, how to generate money this way. And it's something that really does change lives. I've had people later on get in touch, send me emails. I just got one recently, and they realize the power of passive income. It does cut out a lot of stress from your daily life. And of course, I try to look at things in a balanced way. I was asked once what the downside of investing this way is. And the only thing I could really come up with was that you're paid dividends, you're paid rent gross, you got to declare it and pay taxes. Well, that's fine by me. I pay my taxes. I certainly don't try to dodge taxes at all. My tax returns, just, full disclosure here, I'm doing them, just did them for the U.S., and the Australian rolls into the U.S. and now I'm doing them for the U.K. In aggregate, they're about 220 pages. So that's that's a problem. It's between my investment portfolio and the property biz that I own. So, but you just got to stay flexible and positive about these things. And flexibility, I think, is the most important aspect of investing, and I think that's discounted a lot. A lot of my friends, they're real hardcore tech freaks, and I'm a hardcore tech freak, but when it comes to investing, I'm pretty open-minded when it comes to money. I ain't got no pride. I buy anything that'll make me money. And again, here's something I just love to irritate these guys with, right? Because they dump on me for these dividends, and they just don't realize the power of compound interest over a sufficiently long horizon. Here's a good one. This is really cool. Tech isn't the only game in town. We're going back to June 2004. We're looking at the performance of Google. I think this is Class B shares. And we're looking at Domino's Pizza. And my God, look at the winner here. Now, this is really wild. A lot of tech companies, guys, again, I'm as hardcore techie as they come. Been programming since 1980 when I completed my undergrad. Coding on Wall Street started in 1987. So I spend most of my time coding when I'm not working or doing things like this. So yeah, I do put money where money makes me money. Oh, and the backstory about this. Now, yeah, a friend of mine recently left DB about 2 years ago, and she took an MBA over at NYU. Career enhancing move. She's roughly 40 and wanted to make the hop up the management chain, which is exactly what I did. Now, like students do, they kept pestering one of their finance lecturers about stocks to own. And he kept throwing this back. And, they ran the numbers, and it was pretty interesting. He'd always say Domino's. He'd point out this return. And check this out, guys. Apparently, allegedly, I haven't heard this directly from him. This is related to me secondhand by my colleague. Yeah, she told me that he said every year he put his IRA money, and in the States, an individual retirement account, you can capitalize to the tune of $2,000. So every year he would take his retirement capital, put it into Domino's. Now, he didn't really disclose amounts. We don't know if he put all 2,000 or a part of it, but I don't know. It looks like it's what we call a life-changing sum of money, this type of return. It's all due to the stock market, guys. And that's the wonderful thing about investing, and especially that I love about the markets. And this is an interesting one. There is this mentality now when we talk about stocks. Some people genuinely believe stocks only go up. Well, for a long time they have. Without a doubt they have. But I wonder, how much does the Fed have to do with all of this, right? The Fed's been messing about in the markets far too much for my liking. I've mentioned it in these videos before. You can see it in the research notes I published. They're printing far too much money, and most disturbingly, they're using that money to purchase assets. It's very concerning. And so when you start to look at things, maybe the reason stocks continue to go up because the Fed's printing money and buying assets. And we know they've been buying stocks and bonds and things like that recently because of the pandemic. It's messy. And governments really, at the end of the day, are all the same. This meddling isn't really new. Look what the Romans got up to, for God's sakes, with their money. And yes, this is what happened over time. This was inflation. And what they would do is they would trim the edges of the coins and shave off a little bit of gold. These, of course, are gold coins. And over time, the shaving and the cutting got to be a little bit extreme. If you look in the lower right-hand corner there, right? It's going on now, guys. Don't trust the government so much with your futures and your money. You got to be extremely careful about this. It's going on now. It's just not that visible. Back then, of course, you could see it. It was obvious over a long period of time. Now it's not really visible. And that's why I like tangible, real physical assets. I've mentioned this many times, and I showed you my retirement structure last week, 60% gold on the retirement account. Other stuff's in there. But the reason is I'm very suspicious about what the Fed's up to and things like that. So I like gold bullion, as you know. I should say 60% bullion, not gold. I like bullion. I like property. I think they're really nice plays, and I'm not the only person that likes property. This is a fascinating story, guys, off Bloomberg. You can grab it. There's a newly formed company in the States. I won't name them. They've got a bunch of money, about 1.5 billion, and they're setting out to buy and let properties. Now that's actually interesting that they're going to do this. It isn't really news. Blackstone's been doing it since the global financial crisis back in 2007, 2008. They were buying stuff from banks, non-performing loans, and building up a nice business there. Now, what this sets this story apart, there's a couple things. First of all, how are they selecting the homes? Well, the story's light on deeds. I'm not going to go deeper into it in my research. I'm just fascinated by one thing that I'll bring up in a minute. But they've got a system. They're making a lot of noise about AI. And, AI is really, really hyped. And they've got an AI, and they're going to buy about 5,000 homes. And the AI knows in the markets they're operating in, the system knows the optimum pricing based upon rent paid and condition of the house and things along those lines. And they're just dominating some of these markets they plan to when they move in, right? Now, property, as we know, is an illiquid asset. And one thing that I always mention to people is you can't, when you're doing your net worth calculation, which I do every week, do not include your primary residence. Don't do that. That's ridiculous. So I don't include my primary residence. Here's the thing. If you've got a house and say it's worth 500,000, you don't know what it's worth until that money hits your bank account. You honestly don't. And especially if you're trying to sell it and you run into somebody like me who consistently lowballs. I have to admit, I'm terrible. I'm so sorry. But I just put an offer in on a property. They wanted 50. I offered 40. And I told the agent, look, I can pay cash. We'll do a fast deal. And we'll see what they do come back with. I want the property. I don't need it, which is why I'm certainly not going to pay what they want. I'm going to pay less. And if they hit my bid, then fine, we'll do business. If not, plenty of properties out there, right? I do this all the time. The property we're living in now, for instance, they wanted one price and I offered something much lower. And we went back and forth a little bit and I got it. So it's just the way that I like to do business. I can do this because property, as we know, is an illiquid market. And it's interesting when you start to think about this. This is another quote from the article, or a relevant quote from the article. Yeah, it's illiquid. What they want to do is they want to bring liquidity to the market. And my God, sellers getting fair prices? No. The world's going to be a worse place. No, I'm just kidding. It's the way the market works presently. We'll see what they can do and if they can actually pull this off. I wish them well. It's a fascinating story, though, guys. Check it out on Bloomberg, and we'll see exactly what happens. All right, guys, that's it for today. Hope you found it interesting, and we'll be talking again in one more week. And once again, have a very safe and profitable week. I'm doing a bunch of stuff with my property business while I'm on holiday from work. Got a bunch of stuff to do there. So I'll be taking care of the money that way. I'll be buying Bitcoin. I've been on a tear buying stocks. Again, you know the mantra though. Oh yeah, but I'll talk about it next week because I am sort of focusing on energy lately. And there's a whole story there. I'm building up some really large positions in the energy sector. All right, guys. Hope you enjoyed it. Hope you found it useful. You're going to have a great week. Futures are indicating we're going to bounce at the open. Well, of course, we don't know until Monday morning, but we'll see. But in any case, buy and hold. It's the only surefire way that you've got to get rich. Forget trading and all this garbage, right? I always laugh when people talk about trading. Again, I'm terrible. I laugh privately. I don't laugh in their faces, but no, buy and hold, and you'll get rich slowly. It's the best way. Take care, guys.